Shark has fish, but shark wants the fish to multiply faster. Put it in the bank. Low interest, safer, but slow. So shark chooses the stock market. So what is stock really? It is ownership of part of a fish farm. When a fish farm wants to expand, build more ponds, buy automatic feeders, hire guards, turtle will need a lot of fish. Turtle has two choices: borrow from the bank or sell part of the ownership. If turtle sells ownership, shark can buy a piece of the fish farm. After buying, shark owns part of that operation. If the farm does well, shark gets part of the profit. That is called a stock. The stock market does not create fish. Businesses create fish. The stock market is just a marketplace where people trade expectations about the future of fish. For example, this year the fish farm makes 10 baskets of stable, normal, but if people believe, next year it will make 30 baskets. The stock price goes up today. The stock market is like a bazaar. In that market, no one asks, is the fish farm good? They ask, how good will other people think it is? Prices go up because of greed. Prices go down because of fear. These two emotions take turns steering the ocean. Stock prices rise, not because there are more fish today, but because people believe there will be more fish tomorrow. Some people play the market like it is gambling. They see prices going up, they jump in. They see prices falling, they panic and sell. They do not understand what the fish farm actually does. They just stare at the flashing board. That is not investing. That is handing your fish over to emotion. If shark is truly investing, shark looks at the fish farm. How do they raise fish? What are the costs? What are the profits? How much debt do they have? What advantage do they have over the farm next door? Market price is just noise. Business value is the root. Is the stock market risky? Yes, very risky if shark does not understand what shark is doing. If a company goes bankrupt, the stock can fall close to zero. Shark loses almost all the fish. But if shark chooses right, holds long enough, gives the fish time to multiply, shark can grow the school many times over. Why? Because a good business creates real value. Profits get reinvested. The business expands. It grows. The stock market rewards patience. It punishes greed and fear. If shark wants higher returns, shark must accept bigger swings. Prices can drop 30%, even while the fish farm is still operating. Normally, putting fish in the bank is sending fish to work for wages. Buying stocks is becoming a co-owner of the fish farm. The upside can be big. The losses can hurt. Stocks are not for people who need certainty. Stocks are for people who understand risk and accept it. A smart shark does not ask, how much will this stock go up? Shark asks, if I am wrong, how much do I lose? The market does not kill the unintelligent. The market kills the undisciplined. The end. Do not forget to subscribe to the channel.